Hello everyone and welcome to another video on the channel. In today's video, we are going to talk about liquidity and liquidity levels. Okay, so basically what liquidity is it's the whole market. Okay, so everything is liquidity in the whole market, and liquidity is basically money. Okay, there's no need to overcomplicate that, but um, there is a way of trading based just on liquidity. Okay, we focus on supply and demand, but we have some liquidity setups as well, and especially understanding where the liquidity levels are definitely helps us getting better entries, better risk to reward in the end, and basically that is all what's counted. Okay, so um, liquidity, we can find liquidity basically above any high. Okay, about above any high, all this empty area over here, there's liquidity. Okay, above every high and below any low. Okay, but what you're gonna understand is the more lows we have, or the more highs we have, or for example over here, all these highs. Okay, all these highs, and we have all these lows. Okay, what you have to understand is the more equal highs we have, the more, or in the retail world colors of resistance, the more liquidity there is above, and the more equal lows we have, the more liquidity there is below. Okay, so we have this beautiful support, basically support, what we call it, but I don't like to call it support, but for the retail kids it's support. We just call it lows. Okay, it's just equal lows. So below all these lows, there's a lot of liquidity around here. And what exactly happens? Price comes back, takes all the stop losses of these support and resistance trade, and basically they trade like this. Okay, they trade like this, and they do this and this, and they trade all over here. Okay, so all their stop losses are getting hit. Okay, because all their stop losses are right here below. They enter over here, and all the stop losses are below all these lows and these wicks. Okay, so basically what the big guys do is they wait for these liquidity levels, they wait for these stop losses to get hit, and then this is where they enter. They enter basically at these stop loss levels, and the stop loss then is going to be over here. Okay, and then they get the win magically. So this is basically just a simple scenario of how to understand liquidity levels, just the basics. Okay, so what you need to understand is the more equal highs we have, the more liquidity there is above, and the more equal lows we have, the more liquidity there is below. As you can see right here, we have a lot of lows. Like, these are 4 hours lows, guys. This is not some silly stuff. Okay, this is literally 1, 2, 3, 4, 5, 6, 7, 8, 9. So this is beautiful. Okay, so many lows over here. It's crazy. Okay, those are 4 hour lows. So what happens? Price breaks through and then makes a change. Okay, this is this is just mind-blowing if you understand it, and especially when you go down to the lower time frame, for example, a 15-minute time frame. This happens, every single week, almost even daily. you know so let me just show you some examples. For example, here, this was a trade we took actually the other day. So you can see, actually, we're going to use this session's indicator so you can see. So we woke up during London session, as we're based in Europe. You can see this beautiful, all these lows over here. Okay, you can see all these 50-minute lows, and you can see it's ranging a lot. So we know there's liquidity above these highs. You can see 1, 2 nice highs, and basically what happened is price broke out, and then you know uh, made a nice move. So we don't trade before London Open, but if you trade before London, if you trade, for example, Frankfurt Open already, then this would be the perfect trade. You just you see these equal highs, you wait for price to break out, and then you see a reversal pattern or whatever, and then you enter, and then boom, you just make a nice trade. Okay, obviously in the 50-minute time frame, we don't aim for crazy trades, but this is still around 50 pips. So this is very, very good. If you have like a 10 pip stop loss or something like that, it's still a 1.5. That's pretty solid. And same thing happens for the buy over here. We have a lot of lows. We have all these 15-minute wicks. Then we have these two lows, more wicks. It's beautiful support, right? So we have to wait for price to break out, make some reversal patterns of give us an entry, and then boom, we see another move. Okay, so this is just beautiful. Um, where to enter? That is a very good question. We do look at certain price levels that interest us, some algorithmic levels that obviously we can't explain here in the public. Um, but yeah, there are some price levels that are very they're just algorithmic levels. Okay, and they basically work like a magnet almost, because those are the levels that all the institutions that they use those levels. So yeah, we can't really, like I said, tell them to the public, but um, to all our members and stuff, they obviously learn how to do this, which is just very simple and basic. But anyways, um, moral of this video, okay, we look for equal highs, we look for equal lows, we wait for price to break out to give us an entry at certain levels, and then we just enter and we look for certain targets. Okay, we're not greedy with these targets. 50 pips is very good. 50 pips is a very good target. So, if we enter more or less over here and this engulfing candle, for example, whatever, and our stop loss is about 10 pips, and we target, 50 pips, we get a nice, 1 to 4.5, 1 to 5, or whatever. So yeah, this is very, very nice and simple stuff. So guys, what I recommend you do is look on the 4-hour time frame. Look for all these highs. Look for all these lows. The more highs and the more lows, the better. Okay, let me just show you some other examples. As you can see right here, we have a lot of 4-hour highs. We have 1, 2, 3, 4, 5. All these highs. We see price breaking out, and then maybe in a smaller time frame we can find an entry, and then boom, major move that happened right here. Okay, so you can actually see that this was a crazy move that, almost 300 pips. So this is very, very crazy. um, let me see, same thing happened over here. We had these 4-hour highs over here. What happened? Price broke out, probably made some reversal pattern on the lower time frame, and then this crazy move started happening. Obviously these crazy moves happen, but you have to understand where we are as well in the market. So all these bigger moves, they happen usually during like weekly zones or monthly zones, and this is what happened here. So yeah, guys, it's not that complicated. Okay, just look for highs, look for lows. The more equal highs, the more equal lows, the better. Okay, the more um, aggressive the breakout and then the reversal is gonna happen. Okay, so try not to be one of those breakout traders. Understand these liquidity levels. Understand basically support and resistance. Don't use it like the retail people. Just wait for it to break out and then catch the reversal. Okay, this is pure liquidity. Okay, this just can't be any clearer. And this is a strategy on itself, guys. Like what I just explained to you, this is a strategy that you can use, and you can just trade that. Okay, you can say, okay, I'm gonna wait for all these equal highs and equal lows, basically the support and resistance. Then I'm gonna wait for the breakout, and then I'm gonna trade the reversal. Okay, this is a very high probable setup. Okay, this I haven't seen a lot of losses, to be honest, with this setup. Once you see a clean setup and you see a valid entry, this is a very, very high setup. Okay, I haven't, like I said, I haven't seen many losses with it. So yeah, guys, play around with it. Look at it, draw those levels on the 4-hour, 15-minute, even the 1 hour is also fine as well. Definitely a good time frame as well to see these patterns happen quite often. So yeah, guys, not much further to say. Keep it simple. Try it out and let us know in the comments down below if you have any questions about these liquidity levels. If you want to share like your examples, for example, of all these liquidity levels that you find or you may find, just send us on Instagram some images and stuff, and maybe we can help you out, clear some things up. And yeah, if you like this video, always leave us a like. We always appreciate that. We're making several videos every single week, usually Monday, Wednesday, Friday. Just sharing educational content to help you guys out and clear maybe some things up. And yeah, if you're looking for more in-depth training, then always check out our link in the description, where you can go to our website and see how we do things on our side. So yeah, guys, hope you liked it, and we'll see you in the next video.